Yes, good morning. I'm very pleased to be here to introduce you to Dundee Precious Metals, if those of you who are not familiar with us. So you can see a picture here showing our newest mine, the Ada Tepe gold project in southern Bulgaria. So Dundee is a growing mid-tier gold producer, one of the lowest cost gold producers. We'll be in the all-in sustaining cost range of $700 and $750 an ounce, producing about 350,000 gold equivalent ounces starting really this year. Free cash flow expected to be somewhere between $110 and $160 million, depending on what gold price you use. So $1,250 to $1,500 gives you that range of free cash flow, one of the highest free cash flow yields in the mining sector. A strong balance sheet with growing cash balance and liquidity, highly skilled workforce. We've been in Bulgaria for over 15 years, very successful at developing our two mines there, and a proven capability as an ESG performer in terms of getting our social license. So just to give you an indication of kind of how our performance is there, we are ranked here on the ICON ESG score, which is Reuters ICON, 15th out of 280 mining companies. So certainly focus for us has always been around social responsibility, and the success of all of our projects in Eastern Europe and in Namibia are as a result of the focus that we have on social responsibility. In terms of share price performance, we've been outperforming both GDX, GDXJ, and most of our peers over the course of the last if you pick the 1, the 3, and the 5-year period, all three of those we'd be in the top tier of share price performance. Just to give you a quick company overview, last year we produced 230,000 gold equivalent ounces, about 37 million pounds of copper, at an all-in sustaining cost guidance between $675 and $820, and a free cash flow for the first 9 months of the year, $55 million. In terms of share capital, we're about $1 billion Canadian market cap right now. And in terms of where we are debt-wise, we're debt-free, essentially net debt-free. We got $50 million in cash, about $27 million in debt, $43 million in our investment portfolio, and about an undrawn revolving credit facility of $175 million. So shareholders, top shareholders, Dundee Corp, followed by GMT and Banek and EBRD. In terms of location, we're located mainly Eastern Europe for our mines. We've got our Chelopech underground copper gold mine in Bulgaria. We also have our Ada Tepe open pit gold mine in the southern part of Bulgaria. We have a development stage project called the Tsumeb Gold Project in Serbia. We have our smelter in Namibia, copper smelter, which is a complex copper concentrate smelter, treating our Chelopech concentrates and other concentrates. We also own a software company called MineRP Holdings, we hold 78% of that, and we own 10.3% of Sabina Gold and Silver. We also own 19.5% of INV, which is a gold and copper mine in Ecuador. So just to give you an idea, Chelopech is a great story. We acquired that in 2003. We quadrupled production, cut costs in half, essentially. It's one of the lowest cost underground mines of its size in the world today. Generating anywhere between 120 and 200 million EBITDA a year. Peaked in high gold prices at around 196 million EBITDA. And we continue to find additional resources to add to the life of the mine. We currently have a life that is about 8 years on reserves and another 4 to 5 years on resources. In terms of this current year, we produced 173,000 ounces and 37 million pounds of copper, at a cash cost of $579 an ounce. Our Ada Tepe project, the newest project, was just reached commercial production in June of last year, and it reached full production in September. So potentially annual gold production, about 100,000 ounces gold equivalent per year. It's mainly gold and a little bit of silver, and an all-in sustaining cost around $400, or cash cost, sorry, around $400 an ounce. So it's been up and running since September successfully. Last quarter we produced 27,000 ounces, so total for the year last year was 55,000 ounces, and essentially right on track. So the project ramped up under budget and pretty well on schedule. That's the layout. It's one of the smallest footprints, won a number of environmental awards. It's got a very unique tailings disposal system, which is called an integrated mine waste facility, which is a combination of waste rock from the pit and tailings together, mixed in a semi-dry way, and drained material, which essentially eliminates the need for a wet tailings facility. The whole footprint is on the top of the hill. The plant and all of the processing and mining activities and the tailings disposal was all on the same hill. So in terms of the numbers, I think I mentioned this, one of the highest grade open pit gold mines in the world. It's 4 grams open pit, and it's about 2.6 to 1 strip ratio. As I said, it produces about 100,000 ounces a year. It's got an 8-year life. And a cash cost for roughly $400 an ounce. And we got our Tsumeb smelter in Namibia. That is a complex copper concentrate smelter. We send about 1/3 of the material into that facility. The other 2/3 comes from third parties. So that's been a growing situation. We invested about $400 million from the period 2011 to 2016 to upgrade it to meet environmental international standards. That was completed in 2016. It's been generating some small free cash flow since then. 17, 18, and again in 19 will generate free cash for the business. So it's not a major money producer for us, but mainly it's there to ensure that we can process our Chelopech complex concentrates as well as third parties contracts that we have, mostly from South America. So DPM, the outlook's very positive. No debt, generating 110 to 160 million free cash flow on average over the next 5 years. All-in sustaining costs, one of the lowest in the industry, and about growing mid-tier producer, 350,000 gold equivalent ounces. Still trading relatively attractive valuations, about 0.8 times our NAV. Enterprise value to cash flow is roughly around 4 right now. So there you can see the free cash flow yield is running around 27%, and our price to NAV 0.8 times. So essentially, some of the concerns about DPM historically was the stability in the jurisdictions we operate in. We operate in Bulgaria. It's actually one of the lowest cost taxation jurisdictions in the world. 10% corporate taxes, 1.5% royalties. It's very stable, politically been stable since it's joined the EU, the last 10 years. And basically we've been successful at all our permitting activities there, and we have 2 operating mines, and we're very active exploration-wise. Tsumeb capital program was completed, so essentially all we have is sustaining capital, and we are generating free cash flow. Our Ada Tepe project's ramped up to full production, and essentially will be the first full year of production this year. We have our next project in line, which is in Serbia, called Sabina Gold, which is essentially about a 2 million ounce open pit project, heap leach, fairly low cost. We're just doing this pre-feasibility study on that. Our balance sheet's delevered, essentially debt-free, and the focus now is on how we allocate capital going forward. So we have a disciplined capital allocation framework, essentially ensures we maintain a strong balance sheet, and then we focus on return of money to shareholders as well as reinvestment in the business. Thank you very much.